right, Tim, let's talk about the eligibility requirements for the 401k. And I've heard them called solo 401ks.
You talk to most professionals, they kind of cringe whenever they hear the phrase solo K, because that's a marketing phrase. There's nothing inside the tax code that actually says solo 401k. Instead, the fancy phrase they use is one participant plan, and they have certain requirements. But the big requirement for the one participant plan, the solo K, or any 401k for that matter, is that you have to have business income. You have to have some self-employment income for the listeners out there.
Self-employment with minimal employee hours, right?
Minimum employee hours. We don't want to have any employees other than family members or part owners of the company, and we'll talk about that in the next section, but we want to minimize the employees. That's why it's called a solo 401k, one person, yeah.
Yeah, because I get it, because like they have these big companies, and the companies are matching the investment or the investments of their employees, but what happens to the guy who doesn't have any employees? And that's kind of why this plan was invented, the one participant. Like, why can't his business match him if it's his business, right?
Yeah,
absolutely. This is a huge tax benefit that I've learned to take advantage of in the last years that I've gotten into a different tax bracket, a bigger tax bracket. Mm-hmm. And we'll talk about that again later. But so some of the other requirements is, so I guess the main one is you need a business entity.
Yeah,
right?
You got to have some business income, yes.
But that doesn't mean you have to have an LLC or a C Corp. It just means you have to have, a DBA and a checking account, right?
A DBA, you can be a sole proprietor. You can just set up a shingle wherever and say, hey, I'm going to make shoes. Cool. You don't need that corp. You don't need an LLC. You don't need anything fancy. Just yourself. That's all you need.
And a checking account?
Yeah, checking account. Most businesses are going to have a checking account.
Verify that it's there it is. There's my business. There's my checking account.
Yeah, exactly.
Okay. And then you name it whatever you want. What other requirements are there?
Well, other requirements, have got to have that business income. They've got to make something, selling plaques or what have you.
Yeah, it's not enough to have a business and not make any money. You got to show, or at least, I think, was it 2 or 3 years, you have to show an attempt. But if you don't make any money in a certain period of time, then
you don't have to be profitable on day one. You have to show that you're actively seeking a profit with the business, but it doesn't have to actually be profitable. If it doesn't work out for the first year, no big deal. You just got to show that you're trying to make that money.
Yeah, most businesses don't make money in the first year anyways.
Yeah.
Like, what if someone has rental houses and they have rental income?
Yeah, I see this a lot. You can't set up a solo 401k, a Freedom First 401k, off of just rental income. You just can't do that.
Say I have 20 houses or 10 houses or one house for that matter. Can't I just set up a management company? And then now that's my deal. I'm going to set up my management company. I'll open a checking account. And that has like a whole other bunch of games you can play with in the tax code that are legal and all that.
Yeah. I mean, so long as you're providing a legitimate, valid business service, managing your real estate, yeah, you've now converted what was rental income, which doesn't qualify, to management income, which does qualify. Great idea, Mitch.
And how much the management company could charge, as much or as little of that rental income?
Well, it's got to be reasonable.
It's got to be within reason.
Yeah, and they've got to provide valid services too, but that should be no big deal.
Well, if you're keeping track of the books and collecting the rents, if you're providing a valid service, just name it something.
Yeah.
Make it your business.
Yeah.
Okay, so first of all, I'm not a lawyer and I'm not a CPA. My friend over here is an attorney, but he's not a CPA. So if you need to check with your own professionals or whatever, we strongly advise that you do. These are just ideas that we've heard and strategies that we're passing along. But you need to run everything by your own professional first. What about if someone's loaning money? Is that a business?
Interest, that's not considered a business.
I had a lady that was loaning me money and I wanted her to move into a 401k because she had an IRA and the trustee was really, really, really slow. Mm-hmm, and it was pissing me off, really. I mean, because I wanted to do a transaction.
You said IRA trustee and slow. You're being redundant, Mitch.
Yeah.
Yeah.
So I was trying to move her over to a 401k where she would have checkbook control, and she got all freaked out about, well, I don't, she's up in years, and I don't blame her. She's probably in her 80s. Mm-hmm. And she says, I don't want to have a business and I don't have to deal with all that. But after that passed, I started talking to you about it. And I was saying, how come interest doesn't count? He said, well, interest doesn't count. I said, well, what if she charged some fees? Like, what if she charged some points or underwriting fee or filing fee or any kind of fee? Like, of course, I'm going to have to pay the fee, so I didn't want it to be too much. But I said, what if she just charged some fees on these loans, $150, $200, $250? Would that constitute a business now?
Well, yeah, because the underwriting fees, and so long as she does something to earn those underwriting fees, checks your credit score and all that other stuff, now we've got a valid business. Look at all the junk fees they have, and they have doc fees. They have to generate the documents. That's a business, isn't it? That's what paralegals do.
Well,
So
she certainly has to. She certainly does, and would willingly want to verify the value of the property that she's loaning on. So there's a act of work right there, right?
She's underwriting the loan. Absolutely.
The loan. Okay.
Yeah.
What about employees?
Well, once again, solo 401k, we don't want to have any employees, and we're going to talk about the actual requirements in the next presentation, but it comes down to we don't want anyone who's not a part owner of the business involved in this retirement plan. We don't want any employees other than part owners of the business. That's not going to work.
Okay. All right.
And let me just kind of sum up. So the main things, the main qualifications, they got to have active business income. They don't need a business, so they don't need a business entity, I should say. And they shouldn't have employees unless they're owners of the company.
Okay, there you have it. We're going to move on to segment number 4, single participant and solo rules. Okay, so stay tuned.